Let's get in Vaibhav Sanghavi, CEO of Ask Hedge Solutions, now joining us. Vaibhav, afternoon. Thanks for joining in. What's the overall market construct and how are you positioned?
Yeah, I think Remap, from a market standpoint, we've rallied quite nicely this month. And my view is basically depending upon the realignment of flows from an FPI perspective, which will of course follow, our earnings growth story, wherein we do think that this quarter the earnings have been better than expected, and hopefully the recovery continues in the next few quarters as well. And if we see continued recovery in terms of the earnings, my sense is that we will see elevated interest from the FPIs, especially when they are underweight India, as a country within the emerging market basket. So if things go, as per what we are expecting, then there is a possibility that the rally, which may happen probably in the next half of this financial year, or probably calendar year of 2026, would be quite sharp and elevated in that sense.
Hi, Vaibhav. Good to see you, Ben. So you would think most of the bad news is in the price and the markets are bracing for better times?
Yeah, we do think so, purely because, see, if you've seen the last 1 year where because of the weak growth trajectory of the earnings, we've seen consistent FPI outflows. And also because that the AI plays, which is artificial intelligence plays within the region, especially in China, Taiwan, and Korea, kind of attracted a lot of money in that sense. Now, once that kind of gets plateaued, probably it is when our consumption piece, which is always been our strength, if it kind of revives, and whatever indications we are seeing, I think it's on the path of revival, then we will see earnings kind of kickstart again, which will lead the global money back into our market. So my sense is yes, to a great extent we've seen the maximum pain till now, and in an easing environment and in supportive ecosystem from government and the RBI both, we should be looking up.
Vaibhav, what's your view on the banking and the financial names? That's where the big interest is. If you look at the PSU banking stocks, they've got tailwind of their own. There's some point with regard to mergers as well. Foreign money is coming in there, chasing the smaller banks as well. And the larger banks, they look well placed. In fact, we had one of the managements in the morning, Canada Bank. They sounded very, very optimistic. That's a better run bank. Talking about good loan growth, seeing some improvement in NIMs, maybe not to the extent that the street is working with. And ROAs as well will trend to around 1.1%, and they have that gold portfolio. How are you positioned on banks, financial institutions? I recall you had a neutral rating, but that was somewhere in May earlier this year.
Yes, of course. I think we did have a neutral earlier, and especially because we did see good amount of NIM pressure coming about because of the decrease in terms of the bank interest rates. Now that we do see, when we had spoken before the result season, we had mentioned that this quarter probably will bottom out in terms of the NIMs, and then from there onwards we will see some amount of recovery there. Also, the credit growth is something which we are positively surprised, especially on the PSUs. So my sense is basically on an overall banking perspective, we are getting constructive. And from here onwards, we do think that from a business fundamental perspective, we should be looking up again, in the next few quarters. Of course, the pace of recovery may not be extremely sharp, but we do think that this quarter kind of marks the bottoming out, especially on the margin. So we are very constructive here.
Okay, all right. Vaibhav, what do you make of these IPOs? And if you have a comment on Lenskart, what's the visibility according to you?
Nigel, I think not on an individual name for sure, but if you see a broader thesis, right, and over the last couple of years, we've seen that any business model with a technological edge or a capital edge or a product edge is something which is lapped up by the street in some sense. So you will continue to see those kind of elevated interest. Of course, time will tell whether they are being able to deliver in terms of the expected performances. But the only point I would probably make here is that if an investor is getting into a stock or a business model at an elevated valuations, then the gestation period for getting those kind of returns kind of expands in some sense. So one has to be careful in terms of looking at the valuations and investing appropriately. Market definitely gives always good amount of opportunities because of the inherent volatility which is associated with it.
Okay. Vaibhav, thanks very much. We'll let you go on that note, let you enjoy your weekend. Okay, before we toss it to Nigel,